My grandfather used to say something that made absolutely no sense to me when I was younger. The easiest markets create the most expensive mistakes. I thought he was being dramatic. After all, he had lived through a different America. An America before smartphones, before TikTok finance gurus, before teenagers tracked stock prices between classes, before influencers turned wealth into entertainment, before algorithms learned how to monetize human attention. He wasn't against investing. He loved investing. He just didn't trust people, especially when everyone suddenly became confident at the same time. I didn't understand what he meant until I became Ethan Parker, 29 years old, living in Chicago, working as a marketing manager for a tech company, making more money than anyone in my family had made at my age. And somehow, still feeling behind, every morning started the same way. Coffee, emails, meetings, notifications. Then social media. Someone my age had just bought a penthouse in Miami. Someone else retired at 32. A creator posted screenshots showing 6 figures made from options trading. A crypto influencer claimed traditional investing was dead. A real estate investor said renting was financial suicide. A business guru insisted owning stocks wasn't enough anymore. Everyone sounded certain. Everyone looked successful. Everyone seemed ahead. I didn't realize it then, but I wasn't consuming information anymore. I was consuming pressure. Pressure disguised as inspiration. Pressure disguised as opportunity. Pressure disguised as ambition. At first, I did everything right. I opened a brokerage account, set up automatic contributions, bought diversified index funds, read books written by investors who had survived multiple market cycles, ignored the noise, played the long game. And honestly, it was boring, painfully boring. Then the market started climbing again and again and again. Every week brought new headlines. Markets hit record highs, tech stocks exploded, crypto surged. Artificial intelligence companies became Wall Street's favorite obsession. People who had never mentioned investing before suddenly had opinions about it. At office lunches, everyone talked about their winners. Nobody talked about their losses. At family gatherings, my cousins discussed meme stocks at the gym. Guys between sets debated Bitcoin predictions. Even my barber asked which stocks I liked. Something strange happens during a growing market. Investing stops feeling like investing. It starts feeling like a race, and races create losers. One Friday night, I visited my grandfather. He was sitting on his porch, same faded chair, same baseball cap, same calm expression. "You look tired," he said. "I'm just trying to catch up." He laughed. Catching up to who? I didn't answer because I didn't know. Maybe the influencer in Los Angeles? Maybe the entrepreneur in Austin? Maybe the creator in New York? Maybe people I'd never meet. People whose lives appeared between advertisements and sponsored content. He looked at me. Know how I lost everything? I had heard pieces of the story before, but never the whole thing. It happened decades earlier. America was booming. The market was strong. Optimism filled the air. Everyone around him was investing. Neighbors, friends, coworkers. People bragged about easy profits. He felt foolish being cautious, so he borrowed money, took loans, ignored risk, bought whatever everyone else loved. "It wasn't fear that ruined me," he said. "It was confidence." That sentence stayed with me, because confidence was exactly what the internet sold every day. Confidence got clicks. Confidence built audiences. Confidence attracted followers. Nobody went viral saying, "I don't know, the next few months changed everything. One stock doubled, I bought more. Crypto surged, I jumped in. An options trade worked. I increased my position sizes." Every win convinced me I understood the game. Every gain made risk look smaller. I wasn't investing anymore. I was chasing validation. And validation is addictive, especially when numbers prove you right. I refreshed my portfolio constantly. During meetings, at dinner, before bed, after waking up, my mood depended on percentages. Green meant confidence. Red meant anxiety. I stopped asking whether I was building wealth. I only cared whether I was winning. Psychologists have a name for this. Variable reward. The same mechanism that makes casinos addictive. You never know exactly when the reward arrives, which makes the pursuit even harder to resist. Every market notification became a pull of the lever. Maybe today changes everything. Maybe this trade changes my life. Maybe this investment proves I'm smarter than everyone else. The attention economy understood something terrifying. Human beings don't just crave money, we crave significance. Money simply became the scoreboard. Then came lifestyle inflation. My salary increased, my portfolio grew, I upgraded apartments, bought expensive furniture, subscribed to services I barely used, started justifying luxury purchases. You deserve it. You've earned it. You're investing anyway. Small decisions, tiny upgrades, invisible leaks. People imagine financial collapse as one dramatic event. Most of the time, it looks like convenience, food delivery, higher car payments, premium memberships, designer purchases, weekend splurges. Debt rarely arrives wearing a villain's costume. Sometimes it arrives dressed as success. I remember sitting in my apartment one evening, Chicago's skyline glowing through the windows, opening my credit card statement, then my investment account, then my savings account. I had more money than younger Ethan ever dreamed of, yet I had never felt more fragile. Because wealth and income aren't the same thing. High earners can live paycheck to paycheck. Low debt can outperform high status. Appearances can outperform reality. Then the market dipped. Nothing catastrophic, just enough. 5%, then 10, then 15. The same people celebrating gains became quieter. Influencers shifted their tone. Headlines changed. Fear entered the room. I told myself I'd stay calm. I didn't. I sold positions, watched more videos, read more opinions, listened to louder voices. Losses hurt, not financially, emotionally. Because losing money attacks identity. It forces uncomfortable questions. Maybe I'm not good at this. Maybe I never understood it. Maybe everyone else knows something I don't. Human beings experience the pain of loss more intensely than the joy of gain, which means fear often becomes stronger than logic. I sold, waited, watched markets recover without me, then bought back higher, the exact mistake I promised myself I'd never make. One evening, I called my grandfather. I think I messed up. He was quiet. Then he said something I'll never forget. The market tests character before intelligence. I sat there in silence, because he was right. Nobody forced me to chase trends. Nobody forced me to compare my life to strangers online. Nobody forced me into panic. The enemy wasn't Wall Street. It wasn't hedge funds. It wasn't algorithms. It was the version of myself that needed certainty, needed validation, needed speed. I started rebuilding, not my portfolio, my system. Automatic investing returned, emergency savings expanded, debt shrank. I learned about taxes, understood why wealthy people planned instead of reacted, why business structures mattered, why insurance wasn't pessimism, it was protection, why diversification wasn't boring, it was survival, why mortgages should support lifestyles, not define identities, why cash flow created flexibility, why patience multiplied options. Most importantly, I stopped performing wealth. Because somewhere along the way, luxury had become theater. The expensive watch, the trendy restaurant, the upgraded lifestyle, the social media image. Who was I trying to convince, others or myself? The internet rewards visibility. Real wealth often grows invisibly. Quiet investments, quiet discipline, quiet restraint. Nobody applauds the person consistently investing for 20 years. Nobody celebrates the person avoiding unnecessary debt. Nobody goes viral for living below their means. Yet, these habits build lives that survive uncertainty. Years passed. Markets continued doing what markets do. Rising, falling, recovering, surprising everyone. I still invest, but differently. I don't chase certainty. I respect uncertainty. I don't compare timelines. I build my own. I don't confuse attention with wisdom or confidence with competence. And sometimes I think about my grandfather sitting on that porch, watching another generation experience the same psychological traps, wearing different clothes back then. Neighbors created pressure. Today, algorithms do back then. People chased hot tips at dinner tables. Today, they chase viral clips. Technology evolved. Human nature didn't. Maybe that's the real reason most investors fail, even in growing markets. Because rising markets don't eliminate fear. They transform it. Fear of missing out, fear of being average, fear of moving too slowly, fear of watching someone else get rich first, and fear, when left unexamined, becomes expensive. The truth nobody wants to hear is this. Investing was never just about finding great assets. It's about managing the person, making the decisions, the habits, the impulses, the insecurities, the expectations. The stories we tell ourselves. The market doesn't ask how badly you want success. It asks whether you can remain disciplined when success seems easy, because easy money changes people. It amplifies ego, accelerates greed, rewards recklessness, until reality arrives quietly, without warning. No dramatic soundtrack, no breaking news, just statements, bills, regret, and choices. But there's another ending available, one built through awareness. You can recognize when comparison manipulates you, when luxury pressures you, when algorithms provoke urgency, when confidence replaces humility. You can choose systems over impulses, patience over excitement, structure over chaos, because true wealth isn't measured by how impressive your life appears on a screen. It's measured by how stable your life remains when nobody is watching. Maybe my grandfather understood that long before I did. Maybe that's why he smiled whenever markets soared, because he knew something the rest of us forget. The biggest risk isn't investing during uncertainty. It's believing success has made you immune to being human. And the greatest advantage in any market isn't predicting the future. It's understanding yourself, because the market will always rise and fall and rise again. But the investors who survive long enough to benefit from that journey aren't necessarily the smartest. They're the ones who master the battle that happens long before any trade is placed. The battle between discipline and impulse, between patience and ego, between enough and more. And in a world obsessed with looking rich, that battle may be the most valuable investment decision you'll ever make.